Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the dual momentum trading strategy, a method that can combine two types of momentum to help you identify the strongest assets and reduce risks in your portfolio. You will learn how this strategy works, why it has been effective across different market conditions, and how you can apply it to your own trading. Making sure You have to make sure you watch until the end to fully understand the steps and tips that can help you implement this strategy. We start by understanding what the dual momentum strategy is all about, and this is an investment approach that combines two types of momentum, which are the absolute and relative momentum, to identify which assets to buy and when to enter or exit a position. Now, the absolute momentum measures an asset's own performance over a specific period, such as whether it has delivered positive returns compared to its past price range, while the relative momentum, on the other hand, compares the performance of different assets to determine which one has overperformed their peers over the same period. Now, by integrating both the absolute and relative momentum, the strategy aims to capture assets that are not only trending upwards but are also stronger than alternatives in the market. Now, this dual approach helps traders avoid assets with negative trends and focus on those with more promising outlook. The process typically involves calculating momentum scores for each asset, which factors in both its own historical performance and the performance relative to other assets. Assets with the highest score and positive momentum are selected for investment, while those with weak or negative momentum are avoided or sold. This dual momentum strategy can be applied across various asset classes such as the stocks, your bond, your commodities, your index funds, and it is designed to help traders benefit from the market trends while reducing the risk of large losses during drawdowns. By regularly reviewing and rebalancing the portfolio monthly or quarterly based on updated momentum signals, traders can systematically rotate into strong assets and move to safer options such as bond, cash, or commodities when the momentum weakens. So let's see a step-by-step process on how we can trade using a dual momentum strategy. You have to follow these simple steps. The first step is to choose an asset universe. A perfect universe is to select a small group of assets you want to compare, such as, for example, you can pick major forex pairs, stocks, index, or commodities. For this example, we'll be making use of gold and silver. These are commodities. The second step is to calculate your absolute momentum by looking at each asset's performance over a set period of time, usually past 12 months. Only focus on assets that have delivered a positive return during this period. Now, as you can calculate this for silver, the previous month, let's calculate from on the December last year. From December last year, previous 12 months, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And as we can see, from the beginning of last year to the end of last year, we can see there was a rise in price. There was a rise in price. Now, if we go to gold, we will look at it from the beginning of last year, that's January 2024, to the end of last year. That's this. And as you can see, they were performing well and they were moving to the positive direction. Now the third step is to, among these assets with positive returns, you have to compare their performances, identify which of them has the highest return, and this is the asset you would want to invest in. Now we'll look at these two assets, both our gold and silver, and see the one that had a higher return. Maybe we would start by measuring the total distance to know which of them went higher than it should. And as we can see, gold went a distance of 799 pips for the whole of last year, 6 months period. Doing the same for silver, we can see silver went a total of, now let's look at this using this area. It went a total of 709,909 pips, and we can see silver went a total of 1,279, meaning that gold outperformed the silver. So because of this relative momentum, we are sure that we are going to trade the gold because it had a higher return. So because of that, the first step is to move to safety if needed. Move to safety if needed means that if none of the assets had a positive return, you have to move to a safe option such as your bond or cash. This protects you when the market is weakened. Now, when you have decided to invest in the one with a positive return, the fifth step is to rebalance regularly. You would have to hold your chosen assets for a set period of time. When you invest in gold, you hold it for a set period of time, such as maybe a month or a quarter. At the end of each period, you repeat the process. You would have to recalculate the momentum, compare assets, and hold and adjust your position that was being held. You would have to adjust your position by reevaluating, recalculating, and comparing assets again and again. This can work on Forex major pairs, commodities, and the index market, including stocks. So it is about comparing the previous month's performance within the same assets, within assets of the same class, like commodities, between the commodity market, metals, between Forex major pairs, between the index market, between stocks, and so on and so forth. So these steps, by following these steps, you can systematically use the dual momentum strategy to stay invested in the strongest assets and protect your capital during difficult market conditions. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.